The Super Bowl of earnings this week, guys. We have 180 of the S&P 500 companies reporting. That's 36% of the index. So in this video, I'm going to break it down. I'm going to show you all the companies reporting this week. I'm also going to give you an earnings preview for the mega cap tech companies. So you can see Coca-Cola reported this morning. We have a couple more after the closing bell, like Whirlpool, you can see on your screen. Tuesday, after close, we have Microsoft and Alphabet-GOOGL. We also have Enphase, Visa, Chipotle, Texas Instruments. Wednesday before open, we've got Boeing. After close, we got Meta. So Facebook, Meta, Roku, ServiceNow, KLA, a few others. And then Thursday before open, you've got MasterCard, Southwest, Caterpillar, American Airlines. After close, Amazon and Intel on Thursday. Also Cloudflare, First Solar, Pinterest, and more. And then Friday, we have a few of the energy companies like ExxonMobil and Chevron. Now looking at year to date, I put this together this morning and the market is selling off a little bit. So these numbers are slightly lower now, but Alphabet's up around 18% year to date. Microsoft, 19% year to date. Amazon, 25%. Apple is up 32% year to date. Apple reports next week. Meta is up 71% year to date as of this morning. The QQQ, the NASDAQ 100, up about 19%. That's more like 18% after this morning. And the S&P 500, the VU, is up about 8%. The Dow Jones is only up about 2% year to date. So tech stocks have really become the new safety trade, with big tech names a major beneficiary of this dynamic. This is Wedbush analyst Dan Ives. So I'm going to cover these mega cap tech stocks today and show you what to expect on the earnings reports this week. So of course, with these mega cap tech companies, they have strong balance sheets, strong cash flow. You look at the cash flow potential, significant cost cutting underway. Meta's led that, but all these companies, tech in general, has had huge cuts, huge layoffs within tech. Microsoft, Amazon, Google, and others. Also conservative guidance already given in the January earnings season. Rip the Band-Aid off moment, and tech fundamentals that are holding up in a shaky macro are setting up for a green light for tech stocks, in our opinion, he added. Now this is from an article today. So of course the market can go higher from here, but you have to look at risk reward setup too. And we're coming into a seasonally weak period when you think of sell in May and go away, but margins will be a huge focus, especially with these mega cap tech companies. AI, of course, will be a focus when you think of all these mega cap tech companies. The earnings will highlight which companies have been able to maintain margin. In this environment of higher rates for longer than anticipated, some companies have found it difficult to maintain margin. Others have done well. But due to the difficult work done last year, big tech is likely to provide some decent earnings. So cost cutting has certainly proved to be a key in a lot of these rallies in big tech. And Meta really has led the way. 11,000 jobs. At the time, CEO Mark Zuckerberg described it as a year of efficiency in 2023. Now, around 40% of all layoffs over the first 3 months of 2023 are linked to tech companies. And listen to this, the pace is likely to top the total annual tally recorded during the collapse of the dot-com bubble of 2001. So up first, we've got Microsoft. That's Tuesday after closing bell, April 25th. The blue chip stock has been on an impressive run so far this year, up more than 19%. It's down about 2% today. Listen to this stat. It's absolutely crazy. So only 2 months after its launch of ChatGPT, and this is in January, it had 100 million active users, monthly active users. To put this in context, it took Instagram 2.5 years to get to 100 million. So AI, of course, is going to be a big focus. You think of Microsoft, you think of ChatGPT and Bing search and so on, and we want to hear what the CEO has to say, what the company has to say on the earnings report. Expectations for its fiscal Q3 results are mixed. This is according to Wells Fargo analyst Michael Turin. He is overweight, which is the equivalent of a buy. This is due to continued concerns around macro pressures and moderating Azure consumption growth. Azure is, of course, their public cloud services, partially offset by optimism around spend consolidation towards Microsoft and the potential for generative AI to drive upside to estimates. Given the Dow's strong performance in the charts, any potential earnings, and this is for all these companies, any sort of miss is going to make these stocks sell off, and there's less room for error in reported results. So you have to be careful here. So consensus estimates for fiscal third quarter results. Microsoft, $2.23 per share. That's a penny more than they reported last year. On revenue of $51.0 billion, up only 3.4% year over year. Google is also going to be reporting, so Alphabet Alphabet-GOOGL, you can have A shares, GOOGL, or C shares, GOOG. So Google, which also reports after closing bell Tuesday, has been testing an array of new search products for several months, including the test launch of an AI-based tool called Bard that we've covered on this channel here. Make sure you check that video out if you haven't. And is also focused on adding AI features that would support work-related products such as Gmail. So it'll be interesting to see what Google has to say about AI. And they're expected to post a bottom line of $1.07 per share, down 13% from last year on revenues of about $68.84 billion. Meta Platforms, formerly known as Facebook, reporting Wednesday, April 26th. Now, just last week, Meta had several different headlines in the news, including news that the Facebook parent completed its latest round of layoffs, cutting another 4,000 positions in its tech divisions. More buzz began to build on California judge late March preliminary approval of a $725 million settlement in a class action lawsuit against Meta. The suit alleges that Facebook allowed users' data to be viewed and or shared by third parties without consent. So that was news just last week. This week, however, all eyes are going to be on first quarter earnings results. Analysts on average expect the company to report earnings of $2.03 per share. Now this is down 25.4% year over year, and revenue of $27.6 billion also down, but only 1% year over year. So it's very important to understand the guidance that we have. The expectations are pretty low. So if a company misses these expectations, it's going to sell off pretty hard. If it beats, well, you might see a little bit of a pop, but remember I shared earlier, a lot of these stocks have already ran. All these companies have ran pretty hard in 2023 already. So revenue is the biggest question in Meta's first quarter. This is according to Bank of America's securities analyst Justin Post. He has a buy rating on the stock. Our ad checks are mixed. While suggesting Q1 year-over-year spend decelerated versus Q4, some also suggest February improved versus January when Meta guided. The analyst writes in a note to clients, we also anticipate modest pressure on March spend from financial sector issues. Post adds that severance and other one-time items will likely cloud Q1 profits. As such, the analyst is guiding for below consensus revenue of $27.1 billion and earnings per share of $1.94. Now the forecast is to post first quarter earnings of $2.03 per share, down 25.4%, and revenues roughly flat around that $27.62 billion. So Post is expecting a miss here, and that could happen. Amazon is reporting this Thursday, April 27th after closing bell. Consensus estimates for the e-commerce giant to report earnings of 22 cents per share compared to per share loss of 38 cents in the year ago period. Now this is huge, and I think Amazon does have some upside from here, especially when you start thinking of AWS and you think of Bedrock AI. And I recently did a video on that as well. If you've not seen it, go check it out. Revenues are expected to land at $124.5 billion. That is up 6.9% year over year. So that's not a huge year over year gain, but it's better than some of these other companies that we're talking about. And of course, AWS, the primary reason why I own Amazon, is top of mind. This is also from Justin Post, who has a buy rating on Amazon as well. So first quarter growth expectations likely 13%, but this does compare to Q1 2022 growth of 37%. So all these companies are having a downturn here. But while AWS margins will also likely see a year-over-year pressure, we expect beat e-commerce sales and progress within fulfillment optimization, driving profit and earnings per share in line to above street estimates. So we're expecting a beat on Amazon. We'll see what happens. On the price charts, market participants increased appetite for riskier assets at the beginning of 2023. Amazon up around 24% at the time of this video. Still, Post says shares are trading at a depressed valuation versus history, and I do agree with this, and calls Amazon a top stock for lower inflation and interest rates. I think Amazon is still undervalued where it's at, and I think that this has a lot of room to run still. But it's going to depend, of course, on earnings. And it's important to note that if these big cap tech companies all miss earnings, it could bring the entire market down, and you might see some opportunities to buy. So we're looking for a bottom line of 21 cents per share on Amazon, revenue $124.5 billion. So I want to bring this up again really quick. And if there are any stocks on here that you want me to do an earnings recap on, I was planning on doing Amazon, probably Microsoft. Let me know in the comments below. Should I cover all of these companies and do kind of an earnings recap for Microsoft, Alphabet, Meta, and Amazon? Are there other companies on here like Cloudflare you want me to cover? Let me know in the comments below. If I get enough comments, I'll gladly do it for you guys. And if you're new here, make sure you subscribe to the channel, click that bell for notifications. If this was helpful, drop a like and a comment. I appreciate your time and attention. Have a great rest of your day. Take care.